So hi guys, welcome back to another video. In this video, I'm going to be answering a question that I've been asked by a couple of people, especially those who attended our Pepperstone event. How can you hop onto copy trading and what should you look for? So I will attach a video on this video where you can see step by step how you can open an account with Pepperstone and link it to copy trading so that you can at least be able to benefit from the opportunities that exist on that front. However, the thing that I'm going to talk to you about is how you can now select the best strategies, because there are different strategies that are available here, okay? And these strategies have different levels of returns, and these levels of returns also definitely come with different levels of risk. For example, if you just look at the app that I have right now, the Pepperstone copy trading app, you can see that the best strategy has delivered about 7,795% return. And if you just click on it, you can see the percentage that is charged, how many people are copying, and what is the return history and for how long has this account been existing. Like for example, if you look at this, you can see the profitability is about 8,500, the live return, the realized P&L, the balance, the maximum drawdown, the leverage being used, the risk, the trades being taken, the wins, the percentage of wins, the minimum, the maximum, and the markets traded mostly. So there's a lot of data that you can gather up before you at least invest. My advice would be to focus on some specific metrics. The first one being, what is the risk level? An account that has high risk level is not one that you should really strive to copy, because that would mean that as much as they may be higher returns, the chances of also you losing your account are quite high, and you should at least try to avoid that strategy or that provider. But also you should focus on the drawdown level. So after you look at the risk level, you should look at the drawdown levels. The drawdown level, for those who don't understand, the drawdown level is the maximum move from the highest peak in equity ever attained in that account. Meaning, for example, if you give me $1,000,000 shillings and I make 30% in the first year of my trading, but then the next year I lose about 20%, we can say that I've gotten a 20% drawdown. Meaning, as much as I'm still in profit, remember you gave me $1,000,000, I made 30% and I've now lost 20, so I still have 10. It means that I have a 20% drawdown as much as I am in profit. So the drawdown level tells you how volatile the account is. That is how the movements up and down normally take place, okay?
We're giving you the chance to learn Forex for free at Financial Hub, but there's a little twist to it. All you need to do is find your Pepperstone account and boom, you're all in. Deposit $100 and get access to our basic course, perfect for beginners. Or deposit $250 and get access to our exclusive course that is best for advanced traders. Why is this huge? Because you get to learn while you earn. Trade the real money and get real experience. And also you get lifetime access. Once you're in, you're in.
So you could also look at that metric and try and see at least an account that has better metrics when it comes to that. Then you can look at the realized P&L. How much profit has this guy made? By the end of the day, it's money that you're trying to make. And you can also look at the realized return. So avoid accounts that have high risk levels. Avoid accounts that have not been in the market for quite long. Like for example, this is a better strategy in line with me, because this one has a 13.9 drawdown, unlike the first one which I shared. As much as it has less returns, it has less drawdowns, meaning that this is something that is at least more profitable, more promising, because the downside is covered and you can see the risk is lower, and you can see the trades that are being taken, the losses, the wins, and the markets that are being traded primarily. So if you're interested in copying someone, you're not really interested in learning how to trade now, and you're more interested in just delivering returns, I think this is a good opportunity for you to pursue. And I would encourage you to at least look at the metrics that I've spoken about and follow the procedure that I've shared for you to find some of the best strategies and returns. I think one thing that I'd caution you against is the idea of moving up and down. Like, for example, if you observe all the curves, you'll see that at some point the drawdowns are there. So it's important for you not to, most traders, what they normally do is they try to get out when they're losing and to add more money when they're winning, which is generally a good approach. But also it has the caveat whereby sometimes people exit a winning strategy or a winning provider only because these guys are going through a losing period. And losing periods are quite normal in the market. So you should understand that losing periods do exist, they will come, and you should factor that in your decision making, because that will help you avoid this jumping from one account to another, which is something that will not generally benefit you in the long run. So with that said, you can watch the video. If you're interested, you can hop on, download the Pepperstone app on Play Store or on Apple Store, install it, create an account, link it, follow the procedure I shared, look for a strategy provider, test it with some small amount, probably $300-$400. If it works, you can add more money. If it doesn't work, at least you'll have tried and you'll learn something at least from that experience, because I don't definitely guarantee that it will always work. There's nothing that is guaranteed. So it's just a function of looking at the different risks that are contained and the different levels of return that are contained. So with that said, we'll catch up in the next one. Peace.